The auto industry just got hit with a thunderclap. RAM, yes, the powerhouse behind some of the toughest trucks on the market, has unleashed a move no one saw coming, and it's sending shockwaves from Detroit boardrooms to dealership lots across the country. In a bold, almost defiant strike, Ram just slashed prices on its most popular models, and these aren't small discounts. We're talking drops so steep that competitors are scrambling to rewrite their playbooks overnight. This isn't a routine sale or a seasonal rebate. This is an all-out pricing war, and it's already igniting a frenzy among buyers and sending rival executives into damage control mode. Insiders are calling it the most aggressive move the truck market has seen in a decade. Ram's flagship 1500 series, the very trucks that have been eating into Ford and Chevy market share for years, are now thousands of dollars cheaper than they were just a week ago. Dealerships are reporting a surge of foot traffic, with shoppers who were on the fence suddenly racing in before the inventory dries up. And it's not just about clearing old stock. Sources say Ram is positioning itself for a long-term battle, aiming to dominate as the cost of living and interest rates squeeze every household budget. By undercutting the competition so dramatically, they're forcing Ford's F-Series and Chevy's Silverado into a corner where matching these prices could crush profit margins. The ripple effect is already spreading beyond pickups. Analysts are warning that SUVs and even mid-sized trucks from rival brands will have to follow suit to keep buyers interested. Supply chains that were already fragile are now under even more pressure, because sudden spikes in demand can empty lots faster than new vehicles can arrive. For buyers, it's the deal of the decade. For automakers, it's a high-stakes game of chicken that could rewrite the entire pricing structure of the American truck market. And here's where it gets even more explosive. This move isn't just about selling more trucks. It's about reshaping brand loyalty. Ram knows that once a driver switches to their lineup and experiences the ride, the power, and the interior luxury that's been winning awards, they're not going back. It's a calculated play to win customers for life, even if it means taking a short-term hit. Investors are watching nervously as stock prices across the automotive sector wobble. Because if Ram's gamble pays off, the old rules of pricing and profit margins might be gone for good. Industry analysts are digging for clues, and early signs point to a perfect storm behind Ram's timing. Production costs have quietly dropped as raw material prices, especially steel and aluminum, have softened over the last quarter. Add to that a strategic ramp-up in manufacturing capacity, and Ram suddenly finds itself with the ability to flood the market while everyone else is still tightening belts. Insiders whisper that this was months in the making, with supplier contracts locked in at bargain rates and distribution networks primed for a rapid rollout. That means Ram isn't just reacting to market pressure. It's seizing a moment it carefully engineered. Dealers on the ground say the atmosphere feels electric. Showrooms that were ghost towns during the summer slump are now packed with families, contractors, and first-time truck buyers. Sales managers are reporting buyers walking in with quotes from Ford and Chevy and watching their faces light up when they see how much less a Ram 1,500 is going for today. Finance officers are working overtime as customers race to lock in deals before banks catch up and tighten lending terms. The usual weekend trickle of shoppers has turned into a weekday flood, with some lots already warning that certain trims could be gone within days. The competitive fallout is turning brutal. Ford dealers are quietly offering behind-the-scenes incentives just to keep loyal customers from defecting. Chevrolet is rushing out emergency rebate programs, but insiders admit it's like trying to stop a dam from bursting with duct tape. Toyota and Nissan, who've been cautiously expanding their truck footprint, are now rethinking entire marketing campaigns. Even electric truck startups, already struggling to convince mainstream buyers, are feeling the heat as Ram makes powerful combustion models more affordable than some EV leases. Meanwhile, Wall Street is watching every move. Shares of Stellantis, Ram's parent company, have spiked on rumors that this bold pricing strategy could capture record market share before year-end. Analysts on earnings calls are peppering executives with questions about margins, long-term sustainability, and whether this signals a permanent shift in how RAM plans to compete. Some investors love the aggressiveness, seeing it as a way to dominate before the EV wave fully takes hold. Others worry it's a gamble that could drain profits if rivals engage in a drawn-out price war. And the consumer buzz is only getting louder. Social media feeds are flooded with videos of proud new owners driving off lots, showing receipts that look like they've cheated the system. Forums are alive with speculation about how low prices might dip and whether Ram will extend these cuts into next year's models. Truck enthusiasts are debating if this is the golden moment to upgrade or if even deeper discounts are on the horizon as competitors panic. The government is starting to take notice too. Economists are eyeing the sudden spike in vehicle sales as a potential jolt to consumer spending numbers, while regulators quietly question whether an all-out price war could destabilize an already fragile auto finance market. Banks and credit unions, seeing the rush of loan applications, are beginning to tighten underwriting standards, which could push more buyers toward RAM's own captive financing programs. Another strategic advantage the brand seems ready to exploit. Inside Ram headquarters, sources describe a war room atmosphere. Executives reportedly meet twice a day to track dealership inventory, regional price elasticity, and competitor responses in real time. Marketing teams have pivoted overnight, flooding digital channels with targeted ads that hammer home the "why wait" message. Fleet sales managers are also getting marching orders to lock in bulk deals with construction companies and logistics firms before Ford or Chevy can regroup. This isn't just consumer retail, it's a land grab across every profitable segment of the truck market. Suppliers and parts manufacturers are bracing for the ripple. A surge in Ram production means sudden orders for engines, transmissions, and electronic components, straining an already delicate supply chain. Smaller subcontractors are racing to add shifts, while logistics carriers scramble to keep up with the accelerated delivery schedules. Analysts warn that any hiccup, whether it's a rail delay or a labor strike, could choke the pipeline and turn Ram's aggressive pricing into a double-edged sword if demand outpaces supply. Meanwhile, dealership stories keep getting wilder. Some report customers camping overnight to reserve specific trims. Others say they're receiving trade-ins at a rate they haven't seen in years, as owners rush to cash out on used trucks before a broader price collapse hits the resale market. Auction houses are already forecasting a downward slide in used vehicle values, which could reshape the entire secondary market for pickups and SUVs by year's end. And while rivals scramble, whispers of countermoves are surfacing. Ford insiders hint at a limited-time shock rebate package aimed at high-volume states like Texas. Chevrolet is rumored to be weighing unprecedented financing offers, including 0% APR on select Silverado models. Even Tesla's Cybertruck team is reportedly revisiting launch pricing, fearing that Ram's play could undercut the appeal of early electric adopters. The entire competitive landscape is teetering, and every brand knows one misstep could cost them years of market share. Industry veterans are calling this a stress test for the whole market, and the pressure is starting to show in unexpected places. Leasing companies, who built their forecasts on stable truck values, are scrambling to recalculate residuals as the resale floor drops. Insurance carriers are fielding calls from policyholders worried that their nearly new trucks are losing value overnight, which could ripple into premium adjustments before the quarter is over. Even aftermarket businesses, from lift kit specialists to tire suppliers, are racing to adapt, anticipating a flood of new Ram owners looking to customize their bargain purchases. The cultural impact is spreading just as fast. Truck forums are buzzing with stories of brand-loyal Ford and Chevy drivers making the jump, sometimes after decades of loyalty. Local radio ads in key markets like Texas, Oklahoma, and the Midwest have shifted tone almost instantly, with Ram's competitors leaning into patriotism and heritage messaging in a last-ditch bid to slow the exodus. Meanwhile, TikTok and Instagram Reels showing side-by-side comparisons of a discounted Ram 1500 next to a full-price rival are racking up millions of views, turning price tags into viral content. Economists say the timing couldn't be more disruptive. Consumer confidence is already shaky, and big-ticket purchases like trucks often signal broader trends. If Ram's strategy convinces households that now is the moment to spend, before prices rise again, it could create a temporary economic surge, followed by an equally sharp cooling once the frenzy fades. That kind of boom and bust cycle makes central bankers nervous, especially with interest rate policy still a hot debate. Behind the scenes, Stellantis is playing a long game. Executives reportedly believe that locking in market share during this window gives them leverage when they roll out next-generation hybrids and electrics. By expanding the Ram customer base today, They set the stage for loyal buyers to follow them into electrification tomorrow. It's a chess move years in the making, using short-term pricing shock to secure a future foothold in an EV-dominated market. Dealership chatter hints that the next phase could be even more aggressive. Some insiders claim additional hidden incentives are ready to deploy if Ford or Chevy come back swinging, including loyalty bonuses for repeat Ram buyers and fleet discounts aimed at government contracts. If those levers get pulled, the price war will move from a headline story to a full-blown industry transformation, one that could permanently reset what Americans expect to pay for a truck. Wall Street traders are watching the drama like it's a live sporting event. Every rumor of a countermove from Ford or Chevy sends stocks flickering within minutes, while hedge funds quietly bet on which automaker will blink first. Analysts on financial news channels are dissecting Stellantis' balance sheets in real time, looking for any sign that Ram's aggressive pricing will strain cash flow or production costs. The volatility is attracting fast money investors, but it's also spooking long-term shareholders who fear a drawn-out margin war. At the street level, the customer experience is turning into something of a spectacle. Some dealers have set up giant LED tickers outside their showrooms to broadcast the latest markdowns, drawing crowds the way electronic stores once did on Black Friday. Coffee trucks and food stalls are popping up in dealership parking lots to cater to the surge of shoppers waiting for test drives. Sales teams are improvising, closing deals on iPads in crowded lobbies or even out in the lot while families climb into demo trucks. Suppliers overseas are starting to feel the tremor. European steel mills report sudden upticks in U.S. orders tied to Ram's ramped-up production schedule, while semiconductor brokers hint at expedited shipments for truck infotainment systems. Port authorities on the East Coast have already flagged heavier-than-expected freight bookings for the next 2 months, suggesting Stellantis is willing to pay premiums to keep supply flowing. Any slowdown at those ports, whether weather-related or due to labor unrest, could create bottlenecks that feed back into prices and availability. Competitors aren't sitting idle. Ford's internal memos, leaked to a few industry reporters, outline emergency production meetings aimed at squeezing more F-150 units out of factories without hiking costs. GM executives, meanwhile, are rumored to be negotiating with major parts suppliers for temporary cost reductions so they can launch a rapid-fire round of rebates. Even Toyota is quietly polling dealers to gauge how much of its Tundra inventory could be repositioned with flash incentives if the market panic deepens. Consumer psychology is shifting almost by the hour. People who hadn't planned to buy a new vehicle until late 2025 are suddenly visiting dealerships just to look, only to find themselves signing papers after a test drive. Used car lots are reacting too, trimming prices daily as the flood of trade-ins pushes supply sky high. Auction data shows wholesale values sliding week over week, a trend that usually takes months to develop, but is now accelerating in mere days. And as the frenzy builds, one question keeps surfacing in industry circles and social media threads alike. How far will Ram go before someone forces a ceasefire, or before the market itself snaps under the pressure? Market historians are already drawing comparisons to the price wars of the late 1970s, when Detroit automakers battled imported compacts with deep discounts and nearly bankrupted themselves in the process. But this time, the stakes are even higher. Today's trucks are loaded with high-tech components, expensive batteries for hybrids, and advanced driver assist systems. Any prolonged race to the bottom could squeeze suppliers and research budgets just when the industry needs massive investment for the next generation of EVs and autonomous features. On the consumer side, banks and credit unions are tightening loan terms almost daily. A few regional lenders have already announced slightly higher interest rates to offset the sudden risk of declining collateral values. That means buyers rushing to snag a discounted Ram may find their financing window narrowing even as sticker prices plunge, an irony that could accelerate the rush even more. Dealers are warning shoppers to get pre-approval before visiting lots, because tomorrow's rate might not match today's deal. Meanwhile, Stellantis appears to be preparing for an even bigger second act. Sources inside the company hint at a nationwide marketing blitz timed with the next payroll cycle, designed to capture buyers flush with fresh paychecks and end-of-quarter bonuses. Rumors point to limited edition trims with introductory pricing that could undercut competitors by thousands more, creating a sense of scarcity that drives even higher showroom traffic. Fleet buyers are another critical front. Municipal governments, construction giants, and delivery companies are reportedly negotiating bulk contracts at unheard-of numbers. Some city procurement officers are openly bragging that they can refresh entire service fleets years ahead of schedule for the same budget. If these deals are signed in the next few weeks, Ford and GM risk losing long-term institutional clients that traditionally provide stable, high-margin business year after year. International ramifications are starting to surface too. Canadian dealers are lobbying Stellantis for equal pricing, fearing a wave of cross-border shoppers who can save thousands by buying in the US and importing north. In Mexico, independent brokers are already advertising drive-away packages for Americans willing to pick up trucks across the border, where inventories remain plentiful. Trade groups warn this could create a gray market pipeline that further distorts official sales data and complicates supply forecasts. And still, Ram shows no sign of easing off the throttle. Internal logistics reports suggest factories are scheduling overtime well into the next quarter, even if it means paying premium rates to keep assembly lines humming. For now, the company seems determined to outproduce, outprice, and outlast every rival, leaving the rest of the industry to wonder how long they can afford to keep pace before profits and patience run dry. Industry insiders are now whispering that this could evolve into a textbook case of creative destruction, where the weakest players simply can't survive the squeeze. Smaller regional truck brands and specialty upfitters, those boutique companies that convert standard pickups into niche workhorses, are already reporting cancellations and delayed orders as customers divert funds toward the irresistible RAM deals. If the discount wave continues, expect bankruptcies or forced mergers before year's end, reshaping the aftermarket ecosystem that's thrived for decades around America's love of trucks. Even labor unions are taking notice. With Ram factories adding shifts and competitors considering production cuts, union leaders are preparing for tense negotiations. A surge in overtime might sound positive, but workers know that sustained price wars can lead to sudden layoffs if profit margins evaporate. Union reps are quietly pressing for guarantees on job security, while rival plants brace for the possibility of temporary shutdowns if sales slide. Overseas automakers are reevaluating their North American strategies too. Executives in Tokyo and Seoul are convening late-night calls to assess whether they need to accelerate US plant expansions or hold back until the dust settles. European luxury brands that recently dipped toes into the high-end pickup market are reconsidering launch timelines altogether, wary of entering a battlefield where pricing power has all but disappeared. Financial institutions are rewriting risk models as well. Credit rating agencies have begun stress testing major automakers, asking whether extended price cuts could erode debt-to-equity ratios. Some analysts speculate that if Ford or GM join the discount spiral, they may face downgrades that raise borrowing costs just as they need capital for electric and autonomous vehicle development. It's a delicate balance. Compete aggressively now and risk credit pressure, or hold steady and cede market share to Ram's momentum. On the consumer front, the psychology of urgency is hitting a fever pitch. Families who only weeks ago were planning to stretch their current vehicles another year are now making weekend road trips to lock in deals. Social media influencers post daily RAM price tracker videos, comparing dealership quotes across states and sparking cross-country buying sprees. RV forums, contractor networks, and even suburban parenting groups are swapping spreadsheets of best offers like they're trading stocks. And still, the central question looms larger with each passing day. How long can Ram sustain this juggernaut before the economics, or the competition, force a dramatic turn? As the dust of this unfolding showdown hangs heavy in the air, one thing is unmistakable. RAM has detonated a charge that no competitor can ignore. Prices have plunged, buyers are rushing, and the ripple effects are rewriting the rules of the truck market in real time. Whether this bold strategy sparks a lasting revolution or burns out in a blaze of unsustainable discounts, the landscape will never look the same again. If you're watching from the sidelines, now's the moment to stay alert. Deals this aggressive don't last forever, and the next move from Ford, Chevy, or even the upstart EV brands could arrive without warning. Keep your eyes on the dealerships, your ears on the news feeds, and your foot ready to hit the gas, because the next headline in this battle might drop before you finish this video. Thanks for riding along with us on this breaking story. Make sure you're subscribed and turn on those notifications, because when the next shockwave hits the auto industry, you'll want to be the first to know.